Students, this is Kulandiraj, accountancy lecturer, STC College, Bangarpet. Today we are going to discuss the fourth chapter of recording of business transactions part 2. So before going to this business transactions part 2, we can have a glance of accounting process or cycle. So in this accounting process or cycle, the first step itself a business transaction. Business transaction means which involves the money or money's worth, an event that takes place, money or money's worth. So in simple we can say which involves the term called as profit or loss. So in this business transactions we can classify as cash transaction, credit transaction, barter transaction as well as the paper transactions. So this business transaction should be recorded for the first time in the journal or in the subsidiary books. What is this journal? You may be familiar with the journal. So journal means what happens? A recording of the business transactions in a chronological order. And again we will be moving to the ledger, and again it comes to the trial balance, and finally we will be moving to the final accounts. So while coming to the journal or subsidiary books, this is the major concept we need to discuss here. So journal or subsidiary books is there. So why can't we record all the transactions in the journal itself? Why we need to move for this subsidiary books? So journal means what happens? A recording of business transactions in the chronological order. Again we have the concept called as subsidiary books. Why can't we record it in the journal itself? Means here the small businesses will be concentrating, the less transactions will be there in the small business, so we can record it in the journal. So if not, the big concerns, they will be having huge number of transactions, so we can't record it in the journal. So we need to move for the next step called as the subsidiary books. This subsidiary books will be coming in the now whatever the chapter we are discussing, that is the business transactions part 2. So only I have written this accounting process and I am explaining this subsidiary books. Based upon the accounting process, the first step we have completed business transactions, we have completed journal as well as ledger. Now again we are moving to subsidiary books, and again we need to move for the ledger. So now the subsidiary books whole chapter we can see. The subsidiary books, why we can't maintain journal means because subsidiary books are recorded for the purpose of one thing we need to maintain. Whenever the business is huge, the transactions will be huge. When the transactions are huge, we can't record it in the journal, because journal means recording of the day-to-day transactions in a chronological order. Subsidiary books we used to record in a specific nature. We used to say that is huge big concerns means they will be going for the subsidiary books. Now we can discuss about the meaning of the subsidiary book. So subsidiary books, or we can call it as special journals or the day books. What is this subsidiary books means? Subsidiary books are the special journal maintained for the recording of the transactions for the first time in the books of accounts under modern system of accounting. So here this subsidiary books are also called as special journals or day books, where we used to record the transactions for the first time. It is maintained under the modern system of accounting. So we can compare with the journal. Journal means what? Recording of the day-to-day transactions in a chronological order. While coming to the subsidiary books, it is also recording of the transactions, but under the modern system of accounting. So as well as the year also the first time it comes. So what is the difference between the journal as well as here the subsidiary books means? In the subsidiary books we will be maintaining separate books for the each and every transactions. For example, purchase means we will be writing all the purchases in the purchase book. That we will be discussing in the later thing. So again we have a concept called as subsidiary books. Here subsidiary books are the special journals maintained for recording the transactions, business transactions for the first time under the modern system of accounting. So coming to the features of subsidiary books. What is the features here? We can say it is a book of original, prime or first entry. So in this it is a book, that means subsidiary books are the books where we used to record it for the first time. We can record this transactions. It is also a original transaction. Why means as it is business transactions, we are recording in the subsidiary books. Transactions are recorded on the basis, second point it deals with, transactions are recorded on the basis of relevant evidences like invoice, debit note, credit note, vouchers, etc. What here it says means each and every business transaction should have an evidence, that is documentary evidence. A bill should be there, an invoice should be there, a credit note or debit note should be there, a voucher should be there. Then only we can believe that there is a business transaction. If there is no bill, we can't believe that. There should be some documentary evidence to record it in the subsidiary books. It is maintained for recording specific nature of transactions is there. For example, what is the specific nature means here some separate books should be maintained for each and every accounts. We can say purchase means all the purchases will be maintained in the purchase book. Cash means all the cash transactions will be recorded in the cash book. So again it says that it does not consider debit and credit rules. Here the subsidiary books will never consider the debit or credit rules. Here we will be in the third chapter, that is of recording of business transactions 1. In the journal you will be maintaining some rules and regulations for the assets, liabilities, income and gains, as well as for the expenses, as well as for the capital. So here the rules will not apply. So here we will be not considering any debit or credit rules, as well as it provides basis for posting the entries to ledger, same as it is in the journal. Here also after preparing the subsidiary books, so we can post it to the ledger. So again we can glance once again what is subsidiary books means. Subsidiary books are the special journals or day books which is maintained for recording the first time entry under the modern system of accounting. So remember that it is a day book or special journal. We will be recording for the first time. It is maintained under which system of accounting? Modern system of accounting. That means subsidiary books are the special journals or day books which are maintained for the first time. We can say prime entry also there. So it is maintained under which accounting? That is of modern system of accounting. So again we can glance once again the features of subsidiary books. What are the features? Mainly remember that it is a first entry or original or prime, we can say. Here the documentary evidence should be provided. Again it should be maintained for recording of what? Specific nature of transactions. It does not consider what rules here? Debit and credit rules. And again it provides basis for posting the entries to the ledger, as it is in the journal. Here also after preparing the subsidiary books we will be posting it to the ledger. Here the concept, types of subsidiary books. So this is the major concept in this chapter. Based upon this books only we are going to the practical problems after this. So here we can see this cash book, purchase book, purchase returns book, sales returns book, bills receivable book, bills payable book, as well as the journal proper. So types of subsidiary books means remember that the first will be cash book, purchase book, purchase returns book, sales returns book, bills receivable book, bills payable book, as well as the journal proper. So coming to the first book, here what we have taken? Cash book. Cash book is used to record only the cash transactions. What type of transaction we used to record it in the cash book? Only the cash transactions. For example, purchase of goods for cash, purchase of goods from Amir for cash, or received commission, received cash for brokerage, rent received. Like this transactions we can record it in the cash book. Cash book is used to record only the cash transactions. Again purchase book, the second concept is purchase book, used to record only the credit purchases. What type of purchases we used to record it in the purchase book? Only the credit purchases. So purchase returns book, purchase returns book is maintained for what purpose? For the purpose whatever we have purchased, if it is damaged or anything has happened means it will be returned. So that type of transaction, the goods will be returned to the suppliers. So that type of transactions will be recorded in the purchase returns book. So the purchased goods or damaged means we will be returning. So that type of transactions can be recorded in the purchase returns book. Again sales book. Sales book we used to consider only the credit sales. Only what type of sales we can record it here? Only the credit sales we can record. Again we have sales returns book. In the sales returns book we used to consider whatever the sold goods are damaged means the customers will be returning to us, that type of transactions can be recorded in the sales returns book. That means the transactions will be recorded, whichever the customers are returning to us, that type of goods or transactions will be recorded in the sales returns book. Again, we have bills receivable book. Bills receivable book is used to record the transactions of how much we have received, that is bills will be received for the purpose of the goods. So that thing, bills we have received, that should be recorded in the bills receivable book. Bills payable book means what we have accepted the bills, that should be recorded in the bills payable book. And again, journal proper, the transaction if does not appear in any of the subsidiary book means that type of transactions will be coming in the journal proper. Once again I am saying here, so while coming to this chapter, so that is of recording of business transactions part 2. So we have seen the major concept called as what? Subsidiary books meaning. Subsidiary books are also called as what? Special journals, or also we can call it as an day book. Here we used to record only the first transactions under which system of accounting? Modern system of accounting. So and again we have some features of the subsidiary books. We can say that features means original, prime or first entry, a documentary evidence should be there, specific nature of transaction should be maintained, there is no rules of the debit and credit. At last we will be having the cases of posting them the transactions entries to the ledger. So similar transactions will be there. And again coming to the next concept of the types of subsidiary books, we will be having cash book, purchase book, purchase returns book, sales returns book, bills receivable book, bills payable book, as well as the concept called as the last thing is journal proper. So now we can see there, in this recording of business transactions part 2, some theoretical problem, that is from the beginning 1 mark section, 2 mark section, as well as 6 mark section, 12 mark section, practical oriented questions. From all these sections we will be getting the marks. So please concentrate on this chapter, as well as accountancy classwork book should be compulsory. You need to maintain the classwork, as well as daily there will be an homeworks in this chapter for this concept. Whatever we have discussed now, there is not the end. Whatever we have discussed till now, based upon this some homework will be given like this. You can take down the questions. The first question will be, what are subsidiary books? The first question for the homework, it should be written and it should be sent to the concerned accountancy lecturers. So that means the first question will be, what are the subsidiary books? Or give the meaning of subsidiary books. You can take, give the meaning of the subsidiary books. Second question is, write the features of subsidiary books. Write the features of subsidiary books. Third is types of subsidiary books. First question is, give the meaning of subsidiary book. Second is features of the subsidiary books. Third question is, write the types of the subsidiary books. Thank you. Important concept is cash book. So we have seen that types of subsidiary books. Under the types of subsidiary books, we have seen the first book is cash book, purchase book, purchase returns book, sales returns book, bills receivable book, bills payable book, as well as the journal proper. Now under that important concept we are going to discuss about the cash book. So the term cash itself represents that the worth, that is the money or money's worth, we can say, that is nothing but here cash. So cash book, what is the meaning of cash book? Cash book is a book of original entry where all cash transactions, that is receipts and payments of cash, are recorded as and when they take place. So here what it means cash book is a type of subsidiary book, we can say. Here we used to record only cash transaction. What type of transaction here we used to record? Only cash transaction. That means here receipts and payments are recorded. Whenever cash transactions are recorded, we used to confirm it in the two ways, that is of receipts as well as payments. What is receipts means here? Whatever the cash transactions we receive, that is nothing but here receipt. For example, when we sell the goods, we used to receive the cash. So that is called as a receipt. When we received amount from any person, that is also a receipt. So like that, what are the payments? We can say that we are paying from the business to the other person. So cash book is a type of subsidiary book, we can say. So here what transactions will be majorly recorded? Only cash transaction. It is a original entry of which transaction? Cash transaction, that is receipts and payments recorded as and they when act, that is Whenever the transaction takes place, we used to record it under the cash book. Only what type of transaction we used to record? Only the cash transactions. So coming to the next concept, that is features of cash book. What are the features we are seeing here? The first point itself, it says only cash transactions are recorded. Already we have discussed that only cash concept will be recorded in the cash book. That may be of receipt or payment, there should be an occurrence of the cash. So whenever we purchase goods for cash means it is a cash transaction. We have received amount means it is a cash transaction. So again, the next point they are given, it is a book of original entry, prime entry, as it is a subsidiary book. So first it is treated as what book here, which is the first concept here we are treated, that is it is the recording of the original transaction. Subsidiary book means it is the original transactions will be recorded in the first time. So here also the same, it is a book of original or entry or prime entry, as it is a subsidiary book, because cash book is a subsidiary book where the original transactions will be recorded for the first time. It is also the next point, it is also the book of final entry, as it acts as the ledger for cash and bank account. This cash book, while coming to the problems, it will be known, it is ledger, it acts ledger for the cash as well as for the bank account. And next point they are given, it is a subsidiary book as it records the cash transactions. We know that it is a cash book means it records only the cash transaction, as it belongs to the group of the subsidiary books. The next point is all cash receipts are recorded on the debit side of the cash book and all cash payments are recorded on the credit side. That means what happens here, we can say that cash belongs to the group of which group? We can say it is an asset. What is the rule of an asset? Debit increases, credit decreases. So here what we are recording, all the debit side of cash book are recorded of what? Cash receipts. Cash receipts means we are receiving the cash. So automatically what happens? The cash balance increases. Whenever cash balance increases, cash is an asset, debit increases. So we are recording under the debit side. Again, payments, we are paying. What decreases? Our cash balance decreases. Whenever our cash balance decreases, we need to record it under the credit side. So debit increases, credit decreases. So cash is an asset. So here what happens? Debit increases means we are receiving the amount. Credit, we are paying the amount means what happens? Credit balance, that is decreases. All the payments will be recorded under the credit side. All the receipts will be recorded under the debit side. Next point they are given, cash book records only one aspect of transaction, that is cash. Yes, of course, cash book will be recording only the cash transaction, not any other transaction which is related with cash. Then only we can record it in the cash book. Next point they are given, all cash transactions are recorded in the date wise. Yes, of course, all the business transactions related with the cash will be recorded in the cash book. That should be recorded in the order wise, that is in the date wise, as it is you may be seen in the journal. So or in the ledger we can record the transactions in the chronological order, there also the date wise. I said again in the concept of subsidiary books while taking the introduction, that subsidiary books are maintained whenever the transactions are huge. So only we are maintaining which book now? The cash book. In the cash book we used to record it all the transactions according to the date wise. Next, coming to the objectives of the cash book. What are the major objectives we need to take? Means here, to simplify the recording of cash transactions. You will be confused. While journal means you can say all the transactions in one thing only. So we can't identify easily the cash transaction. Here cash book means all the cash transactions will be in one book, that is of the cash book. To next point they are given, to find out the total cash receipts and total cash payments during a given period. In the given period of time, the total cash receipts as well as total cash payments can be easily find out in the cash book. As well as in the journal you can see that cash transaction means we need to search what are the transactions we are made related to the cash. But in case of subsidiary book, that is in the case of cash book, we can easily find out how much we have received the cash, how much we have paid the cash. Next point they are given, to ascertain the balance of cash in hand and time and at any time without actually counting the cash. That means what happens here, we can easily find out what is the closing balance we got in the cash, because we are taking only the cash transactions. For example, I am saying that if 10,000 we have received from a person, 10,000 I am received, I have paid rent of rupees 5,000, then how much is the remaining balance? 5,000. So easily I can say that 5,000 will be my remaining balance. That means what? We can easily find out what is the closing cash balance. Next point we have to verify the correctness of cash in and at bank. So to find out what is the correctness we are maintaining in the accounts. For example, cash book means we used to record only the cash transaction. We can easily find out the mistakes, we can verify it and we can change it and we can rectify the mistakes we can say in the cash book, because we know that what are the receipt as well as the payments what we made. So automatically we can check that cash in and balance as well as the bank balance. The next is advantages of the cash book. While considering the advantages of the cash book, time, the first point says here, time and labor is saved in recording cash transactions. So why a time and labor is saved in recording cash transaction? In general means as it is you will be recording in the date wise, in the chronological order you will be recording. Here also date wise you will be recording, but the transaction varies. A separate book will be maintained for cash transaction. Purchase means a separate transactions will be, that is separate book will be maintained for the purchase. Sale means a separate sales book will be maintained. So automatically what happens, in the one book you will be recording only cash, in one book we will be recording purchase, in another book we will be recording the sales. So here the time and labor is saved. For example, I need to check my balance, how much is the closing balance, means automatically if I go to the cash book, immediately the closing balance I can find out. But in case of journal it is very difficult. Why means we need to search each and every transaction of cash, then we need to find out the balance. Here it is easy only. The next point I said, daily cash receipts and payments can be ascertained easily. I said already, daily cash balance, that is receipts and payments, how much we received, how much we have paid, easily we can find out. How easily we can find out? Because in the debit side all the receipts will be recorded, in the credit side all the payments will be made. For example, 1 lakh is what we have received yesterday, we have paid some rent and other expenses of rupees 50,000, 50,000 is remaining today. We can easily ascertain the daily cash receipts and payments. Next point they said, the cash in and at any time can be easily found out without counting cash physically. Yes, without counting the cash physically. For example, in the evening a shopkeeper has maintained a cash book, he used to record all the cash transactions, you think. So when he has recording all the cash transactions, at the evening he used to count the book itself. In the book itself he used to make an account. Finally 15,000 is remaining. He can't count the cash also, immediately he can say that 15,000 is the balance we have. How much? He has been recorded in the cash book. So next point what it says, mistakes committed in recording transactions can be easily found out by checking the cash book. Any mistakes we made means easily we can rectify in the cash book. We can easily find out how much the closing balance whatever is there, that should be equal with whatever the cash balance we have. If it does not have that cash balance, so we have made any mistake in the cash book or we have theft some amount, we can say like that. Mistakes committed in recording. For example, 1,000 I kept in my pocket in a shop, so immediately I recorded 15,000 is my closing balance. 1,000 I kept in my pocket means how much will be the remaining there? 14,000 will be there. So easily I made a mistake that I have kept 1,000 rupees in my pocket. So immediately there the mistake can be rectified and the 15,000 will be the closing balance. So again the last point I given here, misappropriation of cash if any by the cashier can be easily verified in the cash book. If cash book is recorded means there is no mistakes will be made in the cash book. Why means we can easily rectify how much amount he has taken, the closing balance we can say. So some of the business houses you can say till from the morning till evening they used to collect the business amounts, that is they used to collect the amount, they used to make the payments, at the end at the evening they used to deposit in the bank. So while depositing in the bank, they used to check the closing bank that is the cash book balance. So that the closing cash book balance should be equal to what is the amount they have kept in the physical amount whatever they kept. No, for example, their 1,50,000 months cash book balance is 1,50,000. Physical amount when they are counting, it should be 1,50,000. Then they will deposit in the bank. If any mistakes has been happened in this process while counting the physical amount is less, means somewhere the cashier maybe has taken the amount or some misappropriation may be happened. So this is the concept of the advantages of the cash book. So next concept we have types of cash book. So in the types of cash book, we have three types of cash book: simple cash book, 2-column cash book, petty cash book. So this types of cash book, here we will be doing the problems related with the simple cash book, 2-column cash book as well as the petty cash book. So first concept here comes as a simple cash book. So simple cash book means here we used to record only the cash transactions. Here we will be maintaining only single column of cash. So that is nothing but here simple cash book. Simple cash book is also called as what? Single column cash book. Here only one column will be maintained to record the receipts and payments. For example, debit side means we used to consider receipts, that is whatever the amount we have received, as well as receipt column, one amount column will be maintained. In the credit side, one amount column will be maintained. This is simple cash book, or we can call it as also single column cash book. The next we have the 2-column cash book. 2-column cash book means 2 amount columns will be maintained. For example, we can take it as cash as well as the bank column will be maintained on debit side as well as under the credit side. Lastly, we have the petty cash book. For the petty expenses, we used to maintain this petty cash book. Yeah. Now, the concept of types of cash book is completed. In the next class, we are going to discuss the important concept related with the simple cash book. Very important class, because the problems will be started related to the 6 marks. In the 2-column cash book, we will be having the problems related with the 12 marks. In the petty cash book also, we will be having the 6 marks problem. So listen the classes carefully. Please maintain classwork book, that is whatever the college has been given. SHS sir has written the book, no, that book should be maintained, as well as the classwork book should be there, and whatever the materials required, the calculator should be there, and all the pencil as well as pen, there should be all recorded should be there. So today's homework should be of, see here cash book they are given, yes, right, give the meaning of the cash book, right. First question will be give the meaning of cash book. Second one will be write any 2 feature of the cash book. Write any 2 feature of the cash book. Third question will be of write any 2 objectives of cash book. Fourth question will be write any 2 advantages of cash book. Next question, write any 2 advantages of the cash book. So that's it for the day. Thank you, students.